Hello traders, it's Martin Rhymes with Hit the Mark Trading, and we're going to take a look at the S&P 500 post FOMC, okay? Now, we've got, this is the intraday chart, a 5-minute S&P 500 futures. You can see that there's really no great shakes. We rose a little bit in the morning, fell down here to a floor pivot, S1, have moved up, but we're really not doing anything. Today's action is trying to figure out how do we want to respond from yesterday's FOMC action. So I always look for an initial action followed by reaction to the action, and the market is still trying to sort that out. Now I have a 34 exponential moving average here. I put that on all the charts. Down here you see the commodity channel index. Let me just draw a line here. Okay. All right. And one more line just to be complete. Okay. Good. Typically when we see price hit the 34 exponential moving average, we see price rise, okay? The action is so muted that if we see a rise, we're not going to expect much out of today's action. Just going up to the main floor pivot, we still have opportunity for an afternoon sell-off to take it down. Big picture, non-direction. Big picture, non-direction. Speaking of big picture, let's go take a look at the daily chart. Now, the daily chart shows us that this hesitation is all caused by price being at the top of a channel line. And more often than not, these channel lines hold, and this is the history. We expect them to hold. So we come up, we just move to 34 MA, maybe to the bottom of the channel. We move up, we fall back, we move up, we fall back. We are in an oversold position looking for a pullback. Okay, absolutely. Let me show you the weekly chart just to be complete. And what the weekly chart shows us, wow, we've got this great line of demarcation for price to be banging up against. We bang up, down, touch it again, fall back, touch it again, fall back. So I drew this intermediate line. This is from the daily chart. Now any pullback is expected to come and touch this line with, potential to go lower to the moving average, which is around 1641, okay? So what are the implications? Well, if you see that in our history, we touch and drop, we touch and drop, touch is expected to see a drop. This means you add a little extra hedges, right? But we have to keep going long because the trend and momentum are absolutely incredible, okay? Let's go back to the daily chart. All right. So a pullback is expected to 1714 with potential to go to 1680. Absolutely. I think it would take some type of a geopolitical event, something to scare the markets to see this thing actually fall. Anything can happen. If we fall, there's 1580. But the most likely course, as we have seen, is to see a drop to our moving average and the bottom. Now, coming in November, wow, we've got one of the largest buy signals ever, empirically proven, and all this takes place in mid-November. So it's quite healthy that in the strong trend, we should see a pullback. Okay, again, mild pullback is expected. It's not the end of the world if we drop all the way back down here. Trend and momentum extremely strong. I'll talk to you in your next video.